Wealth Wisdom. Unveiled. 12 money-saving tactics that set the rich apart. In a world of instant gratification and consumerism, mastering the art of saving money seems like a quest for the Holy Grail. However, the rich have tapped into wealth wisdom that not only preserves their wealth, but also continues to grow it. Today, we're diving deep into their wealth preservation strategies to uncover the stealthy and effective secrets that could transform your financial life. 1. The 24-hour rule, a shield against impulse buying. Slow down before you spend. The first gem in the rich's money-saving arsenal is the implementation of the 24-hour rule, a powerful antidote to impulsive purchases. This rule dictates that before making any significant purchase, take a full 24 hours to think it over. This cooling-off period gives you the chance to consider the necessity of the buy and to weigh it against your financial goals. Question: every purchase. In practice, this means whenever you are faced with the urge to buy something, especially if it's a luxury or non-essential item, take a step back. Ask yourself if this purchase will add real value to your life, whether it aligns with your financial vision, and if you can truly afford it without sabotaging your savings plan. The result: conscious spending. By applying the 24-hour rule, the rich reinforce their discipline, avoid regrettable splurges, and preserve their wealth for more meaningful investments. 2. The power of cash, physical bills as a spending break. Tangible money, tangible control. Next on the list is the all-cash diet, a strategy that involves using physical currency for all expenditures. This palpable approach makes spending more real, unlike the detachment one feels swiping a card. You can only spend what you have in your wallet, directly curbing excessive outflows. Keeping it real. Transitioning to an all-cash lifestyle might seem daunting at first, but it forces you to confront your spending patterns head-on. The physical act of handing over cash is more memorable and impactful than tapping a piece of plastic, making you more aware of the money leaving your hands. The virtuous circle. As you grow accustomed to this method, you develop a stronger connection with your money, ensuring that you spend it wisely. The rich use this tactic to maintain control over their impulses and budget effectively. 3. Budgeting. The blueprint of financial success set the stage for savings. Not surprisingly, setting and sticking to a budget is at the core of wealth wisdom. A budget is a financial roadmap that outlines where your money should go each month. The rich understand the importance of planning and make deliberate decisions about how to allocate their resources. Meta money management budgeting isn't about restriction, it's about empowerment. When you budget, you take charge of your money instead of letting it control you. You can plan for both short-term expenses and long-term goals, ensuring that every dollar serves a purpose. Adjust and adapt. Following a budget can also help identify areas where you're overspending. Regularly review and adjust your budget to reflect your evolving financial situation, just as the wealthy do to maximize their wealth potential. 4. Smart investments. Spend money to make money. The growth mindset. One of the most insightful habits of the wealthy is investing in items or services with the potential to generate income or enhance earnings. Rather than splurge on depreciating assets, the rich focus on opportunities that will yield returns, such as real estate, stocks, or a business venture. Quality over quantity. This doesn't mean throwing money at every opportunity that comes their way. The rich conduct thorough research and sometimes seek expert advice before committing their money, investing with a sense of purpose and a clear understanding of the potential risks and rewards. Learning from losses. Even the most successful investors make mistakes, but the rich view these setbacks as learning opportunities. They analyze their losses to improve their investing strategies, always with an eye toward long-term wealth accumulation. 5. Long-term goals. The North Star of the affluent, setting the sights on the horizon. Prioritizing long-term financial goals is a hallmark of the wealthy. They recognize that true wealth isn't made through quick wins, but through a consistent and steadfast commitment to future objectives, be it retirement, legacy building, or wealth preservation. Delayed gratification, a virtue of value. This means often saying no to immediate pleasures in favor of investments that will pay off in the future. The rich are willing to delay gratification, knowing the rewards for such patience can be substantial. Vision mapping. Creating a clear vision for one's financial future helps in making wiser decisions in the present. By setting long-range goals, the affluent can avoid getting sidetracked by short-term temptations, which is a key ingredient in the recipe for sustained financial wellness. 6. Tax savvy. Minimizing the government's cut, an intelligent approach to taxation. Take advantage of tax-advantaged accounts to save wisely and lessen the burden to Uncle Sam, a strategy frequently employed by high-net-worth individuals. By utilizing accounts like IRAs, 401ks, and HSAs, the rich are able to grow their wealth while reducing their taxable income. Beyond the basics. The wealthy also often consult with tax professionals to explore other lawful avenues for tax minimization, such as charitable contributions, tax loss harvesting, or strategic asset placement. They stay informed about tax law changes to optimize their financial strategies accordingly. Continuous fiscal fitness. By consistently applying tax-smart practices, the affluent not only save money, but also reinforce the habit of proactive financial management. 7. Mindful spending, the art of wise purchasing value. Above all else, purchasing based on value rather than just price is a guiding principle for the wealthy. They spend more on quality items that will last longer or provide a higher return, rather than buying cheaper, less durable goods. Cost per use calculation. For instance, a rich person might invest in a costly but highly efficient appliance that saves money in the long run instead of a cheaper model that will need replacement sooner. This cost per use calculation helps them to make smarter purchases. Sustainable habits. By focusing on the longevity and usefulness of what they buy, the rich ensure they get the best bang for their buck, making mindful spending an integral part of their financial philosophy. 8. Financial literacy. Never stop learning, ever-evolving expertise. Education is a priority for the rich when it comes to preserving and growing their wealth. They continually educate themselves on financial matters, understanding that the economic landscape is always changing. Staying informed. This entails keeping abreast of market trends, economic indicators, and new investment opportunities. Whether it's through books, courses, conferences, or news, the affluent stay knowledge-rich to be wealth-rich. Counsel counts. Moreover, they are not afraid to seek out advisors and mentors who can provide specialized insights. Networking with other financially literate individuals keeps them on the forefront of investment trends and financial planning strategies. 9. A diversified portfolio, the safety net of the smart investor, wide-ranging riches. A key component of the rich's investment strategy is a diversified portfolio. By spreading their investments across various asset classes, industries, and geographical locations, they buffer themselves against market volatility. The power of balance. The wealthy understand that no single investment avenue is foolproof. By balancing high-risk with low-risk investments and mixing short-term with long-term ventures, they create a resilient financial ecosystem. Continuous calibration. As markets change, so do the compositions of these portfolios. The rich regularly reassess and rebalance their investments to maintain an optimal risk-reward ratio, illustrating their hands-on approach to wealth management. 10. Periodic financial reviews, keeping wealth on track. Regular reality checkups. With regular financial reviews, the rich ensure that their investment decisions align with their evolving financial goals. These checkups are akin to a business audit, detailing progress, highlighting oversights, and shedding light on new opportunities. Course correcting with confidence. If financial goals have shifted or certain investments aren't performing as expected, these reviews are vital in making the necessary strategy adjustments. This dynamic approach helps the wealthy stay in control of their finances and adapt with agility. Long-haul horizon scanning. This continual reassessment of their financial health allows the rich to spot trends and make educated guesses about where the market is going, planning their next move so they're always ahead of the game. 11. Networking. Building a finance brain trust. Wealth. Wisdom. Worshipping. Among the impactful wealth wisdom habits is the practice of networking with financially savvy individuals. This opens doors to useful advice and insider insights that can significantly impact one's own saving and investment decisions. The power of peer pressure. Positive peer influence is an often underestimated driver of good financial habits. Establishing relationships with those who prioritize financial stability encourages similar behavior in one's own life. Circle of trust. Through this shared knowledge and experience, the rich gain advantages in managing their wealth that goes beyond mere financial transactions. It's about building a community of like-minded individuals who support each other's economic endeavors. 12. Reinvestment, the cycle of wealth. Multiplication, profits as seeds for tomorrow's harvest. Lastly, systematically reinvesting profits is the cornerstone of intergenerational wealth. Instead of frittering away their gains, the rich treat profits as capital to be multiplied. The compounding effect. By reinvesting these gains, they tap into the power of compound interest, which is often hailed as the eighth wonder of the world. Over time, even small amounts can grow exponentially, resulting in substantial wealth accumulation. Pursuit of perpetual prosperity. Through disciplined reinvestment, the rich ensure that their wealth is not static, but is a flourishing and evolving asset, always working for them, even when they are not working for it. On the path to financial freedom, the trails blazed by the rich can serve as guiding lights. While their steps might seem shrouded in mystery, these 12 strategies reveal that practical, disciplined approaches are at the heart of their financial success. Embrace these secrets, and you too can lay the foundation for a future of abundance. Thanks for reading. Love, Juan.